Friends, do you hear the chiming of bells? These are the IPO bells of LIC. The bells have started chiming since May 4th. The IPO rollout started and the bells are chiming and the notification is brought forward. This is LIC Insurance, Life Insurance Corporation of India. This is first day notification, second day notification, and tomorrow we'll get one more notification. After 3 notifications or 4 notifications, on May 9th it will be closed for subscription. On May 2nd it was opened for anchor investors. On May 4th it is invested for retail investors. So the much awaited LIC IPO, the government IPO, is now out in the bazaar. So the LIC IPO is out in the bazaar, and the LIC IPO is a product, nothing but a product, and the merchants wants to sell and make money, and it is very clear that the government of India is waiting for the disinvestment receipts. They wanted a huge amount, but now they have brought it to a low of 21,000 crore because the market, it may not suck out that much amount from the market and the public at large. They must only put in market only such amount of goods which can be sold in the market. If they bring higher quantity, they will have to take it home. If they bring lower quantity, they can tell no, the stock is over and we are pleased, and they can sell on demand. That's the reason why they have brought it down to 21,000 crore. 21,000 crore. And the LIC IPO, as you see here, reads in the whole page, and 10 lead bank managers, Kotak, Axis, BOFA, Citi, ICICI, Goldman Sachs, JM Financial, JP Morgan, Nomura, SBI Capital. So these are 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. This 4 and this 5, 9. All the 9 lead managers are headquartered at Bombay, but one lead manager is headquartered in Hyderabad, and that is KF Intech, KFin Technologies, Selenium Tower, Tower B, plot number 31 and 32, Gachibowli Financial District, Nanakram Guda. So I was happy to see that there is just one lead bank manager stationed in Hyderabad at Narnakaram Guda. Okay, it's a simple matter, but I want to tell you some more things. The LIC is promoted by the President of India. Our promoter is the President of India acting through the Ministry of Finance, Government of India. And that is the first reason where we should take care. Because necessarily in this IPO, governmental interference will persist and persist, maybe for good or bad. If it is for good, we welcome it, but if it is for bad, we can't welcome it. Already money is being sucked out from the public and investors for filling up the receipts of disinvestment targets of Government of India. The main reason. And here I want to make highlight of the risks that this IPO is carrying out. So as I read them, you please take a note of these. The risks, totally the risks are numbered at 9. 9 risks are shown in the IPO notification. 9 risks. So usually in the other categories we see only 4 or 5 or 6 at the maximum. The risks number will be 6, but here we get 9 risks. I have to read all the risks, but of all the 9 risks, governmental interference is not shown as risk here, but it is a risk which is inherent. So the total risk will be 9 plus 1, that 1 is governmental interference, but it is not shown here, but it has to be kept in mind. Out of the 9 risks, if I come by the 9th risk, that is the 10 book running lead managers associated with the offer have handled 70 public issues in the past 3 years, out of which 23 issues closed below the issue price on the listing date. So the issue price is 949 and it may even get listed higher also. It's not a great problem, because being new, the people are getting more and more. Already it is shown as a subscribes to some extent. The entire net proceedings will be paid to the President of India, and the corporation will not receive any proceeds of the offer. The entire proceedings will go to the Exchequer of India in the name of President of India. Our individual agents procure most of our individual new business premiums. If we are unable to retain and recruit individual agents on a timely basis and at a reasonable cost, this could be a material adverse effect on our results of operations. They were depending on the agents, 13 lakh and above agents, and even now also they will have to depend on the agents only who are not tech savvy. Old agents have to continue the new business, which will be necessarily a risk, and it is shown here also. And I read again, our individual agents procure most of our individual new business premiums. If we are unable to retain and recruit individual agents on a timely basis and at a reasonable cost, there could be a material adverse effect on our results and operations. So keep in your mind, friends, if we give 2,000 to an able person, he will not only return it, and we may even seek a benefit, a special benefit from him. But if you give 2,000 to a incapable person, not only we don't receive that 2,000, and we will lose the person also. So, though there are topmost people are sitting back and giving orders and getting things done, it has to be bit changed in the new scenario, and there can be 1,000 reasons for the death of anything. So this is a major threat which can be just sometimes people say it's not a big problem, but it can still be a great problem. It is enunciated in the risks column. Corporation is not a corporate incorporated under the Companies Act. The LIC is shown as a corporation but not incorporated as a company, and is established and governed as per the provisions of the Life Insurance Corporation Act 1956 and the rules and regulations framed thereunder. Accordingly, the corporation is not subject to the provisions of the Companies Act. This is not a company. This is not subject to Companies Act 2013. This will be a totally new thing. This is another relaxation of the Government of India and SEBI. We can't seek any court interference on the basis of Companies Act, already shown here. This is only to suck money from the people for filling the exchequer under the name of disinvestment receipts. So it is not a company, it still works according to the norms specified in Life Insurance Act of India 1956. The market capitalization embedded value ratio on the embedded value as on September 30, 21 for the corporation at the upper end of the price band is 1.11 compared to the average industry peer group market capitalization embedded value of 3.41 simple average basis. Potential investors may note that the embedded value of the corporation could be sensitive to the equity markets given the size of the equity investment portfolio of the corporation. So embedded value is something different always. The LIC also wanted to show the embedded value a bit higher also, but because the size will be increasing and they cannot, the market cannot absorb it, and that is the reason they have brought it small as they and begin to tell that it is very attractive, it is very attractive, it is very attractive. Since the embedded value is brought low, as low as 1.1. 1.11. You are attracted there and don't get cheated. Average cost of equity shares for the selling shareholder is 0.16 each, and average price at the upper end of the price band is 949. Details of acquisition of all equity shares transacted in the 3 years and 1 year are shown, last 1 year and for last 3 years. Weighted average return on net worth for fiscals 2021, 2020 and 2019 is 182.25%. So these are the things which we read on this notification. So you have to prepare and get ready with your ASBA account and keep at least 14 to 50,000 for smaller investment and 2 lakh for the upper investment, and in case if you are doing for 3 categories, keep 6 lakh ready for you. And the subscription has started and the first day has been completed, and we have good results. And the first day reports of the newspapers, if we see, it's not so bubbling. The first day report goes like this, and very frankly the papers write and we read. LIC anchor book, a breakdown. LIC anchor book, a breakdown, and this is mint paper dated May 4th. LIC anchor book, a breakdown. So here you see, I read, domestic mutual funds brought a majority of shares set aside for the anchor investors ahead of LIC IPO, as most large foreign institutional investors FIIs stayed away. Most large foreign institutional investors stayed away. A Norwegian sovereign wealth fund and a Singapore government were among the marquee FIIs that bought LIC shares. A look at the investor profile. So they were expecting that many would come and invest, but no one turned. Only 3 people turned. Only three. Who are the 3? Who are the 3? As told already, Norwegian sovereign wealth fund and Singapore government and another GIC, FIs of LIC shares. So biggest foreign investors, biggest mutual fund investors, investor mix. IPO dates 4th May to 9th May. The total funds raised in anchor book per share in anchor book. So 5,627 crore at the share of 949. IPO size after anchor allocation 15,372 crore. Price range for IPO ranging from 902 to 949. This is the report which we read after the investment portion is shown. So take note of this. LIC anchor book, a breakdown. And on the today, this is Thursday, May 5th. Thursday, May 5th, business line. We read the performance report. It goes here. Day 1 of the LIC IPO. Policyholder staff portions fully subscribed. The first day of the initial public offering of LIC saw strong demand from employees and policyholders. The IPO was off to a strong start and was subscribed only 0.67 times by 7 p.m. on Wednesday. And they says everything is strong. So on the first day it will be oversubscribed, but it is only 0.67 and they are calling it as strong. You understand? I bet you can infer from that. Bids for 10.86 crore shares were received against the 16.20 crore equity shares, excluding anchor investment portion, on offer. According to data with stock exchanges, the portion reserved for policyholders was subscribed 1.99 times, say 2. Policyholders were subscribed 1.99 times, while that for employees was subscribed 1.17 times. The portion for retail individual investors was subscribed 0.60 times. In the non-institutional category, 0.27 times of the quota was subscribed. The QIB quota was subscribed 0.33 times. Foreign institutional investors put in bids for just 225 shares. Uday Kotak, MD and CEO, Kotak Mahindra Bank said it is heartening to see the response of retail investors to the issue. So usually the strong IPOs will be oversubscribed on the very first day and the very first hour. Very first day and very first hour. This has not even crossed 2 or 3. Sometimes it will be more and more. They talk much and do less or whatever. And let us see, of course time is there, it may be subscribed, but the initial start is not so good. It is not encouraging. That is what we read from the first day positions. Day 1 LIC IPO policy holder. Day one report. So how do you feel? Is it encouraging or discouraging? How do you feel? And why should you feel? This is a government company. He is a merchant. He wants money. He wants to suck money from you. And he says you will get lot of listing gains and their long-term gains. They may fizzle out or may not fizzle out. And everything is in the hands of Almighty God. LIC and LIC. Keep on telling LIC, LIC. And it is now rolled out and brought before you for active subscription. Do. And here we have the angst of LIC's strong army of 13 lakh people waiting and waiting and waiting to bring the LIC to a great level. LIC has the largest insurance sales force in the country by far, accounting for 55% of the total number of agents in the country. LIC has acknowledged that the agents need to be trained and incentivized better, noting that it is facing high attrition. So it is facing high attrition. Is facing high attrition. You should understand the LIC very well. It is facing high attrition. Insurance Reward to insurance agents and insurance intermediaries regulations 2016 limits our ability to incentivize our insurance intermediaries in India. So it limits our ability to incentivize our insurance intermediaries in India, individual agents, corporations, insurers and brokers, insurance marketing firms, by imposing limits on the payment of commission or remuneration to such agents or intermediaries, the IPO documents said. So they are limited in their capacity to incentivize the agents. It's clearly seen the 13 million strong army. 13 million strong army to push ahead or to push ahead or pull back. To push ahead or pull back. Let us read something more. Those were the day. Parekh, now 55, joined LIC at the age of 18 as part-timer since he had to support his family financially. He maintains about 100 books that contain his customers' birthdays, anniversaries, premium dates and policy claim. I used to go through the obituary columns in newspapers every morning in Nagpur. I used to then visit the grieving families for the next few days, trying to understand if there are any insurance claims that the family can benefit from. So when there is an obituary, they used to go to them and see if any insurance claim is waiting for them. He does not see the rise of digital insurers affecting the prospects of LIC agents. It's a push and pull concept. It's a push and pull concept. You may buy car insurance online, but life insurance, you will meet an agent and find out details that will impact your family. Car insurance is short term and you can go wrong with it and review it again. The same is not the case when terms are for 2 decades and more, explains Parekh. So because the car insurance is only for 1 year, but here we take a long insurance, and so we need a agent who will convince us about the need of LIC, and this strong army should again come and help us. But the image of a professional financial consultant is often lacking. Rangwala recalls that he was not allowed inside the homes of many customers. Tired of chasing leads, he left his job for a while in the 70s and joined a hotel in Mumbai at the front desk. So, but the image of the professional financial consult often lacking. So, when you see a LIC agent, Thero, Baha Thero, we tell him, oh, sit there. So many insurance are not allowed inside the house and offered a chair. And 13 million people are somehow pulling on, and this is what they say. But the image of a professional financial consultant is often lacking. Rangwala recalls that he was not allowed inside the homes of many customers. So he went and joined a hotel in the front office. Then why should we in the insurance sector get upset and join some other industry? Wonders Rangwala. Then why should we in the insurance sector get upset and join some other industry? Wonders Rangwala. He soon left his hospitality job and went back to working again as an agent. So wherever he went, he felt differently. Nevertheless, LIC does have a tough job. Many like Parekh remain confident LIC can retain its loyal agents. COVID made it difficult for agents to go into the homes, but now things are looking up. I am sure LIC will work to retain agents. Once the LIC agent, always LIC agent. So LIC agents, when they start their career as LIC agent, they will finish up only as an LIC agent. They are very honest. But now the LIC should take care of this 13 million to avoid the risk which we read already, and I read it again in its face. What was the risk that we read? The risk also I face it here. The risk our individual agents procure most of individuals' new business premiums. If we are unable to retain and recruit individual agents on a timely basis and at reasonable cost, there could be a material adverse effect on our results of operations. The LIC operations are depending on the 13 million, and that is shown as a risk here, since they will be treated or targeted or asked to do jobs under pressure. So they should go home to home, house to house, street to street, and gather them and convince them, and they should get digitally quick, digitally active, and carry all the digital devices and execute a claim, execute a policy. This is the main thing. Let us understand and hope this LIC after listing may turn out successful in this. So with this, LIC is turning out to be a listed company, but it is not going to be a company in terms of Companies Act 2013. Companies Act 2013? No. is ruled out. It is shown in the risk, and I read it again. The corporation is not incorporated under the Companies Act 2013 and is established and governed as per the provisions of the Life Insurance Corporation Act 1956 and rules and regulations framed and thereunder. Accordingly, the corporation is not subject to the provisions of Companies Act 2013. 2013 came out. 2013. It is not 2013. That is to be understood well. When the risks are understood, usually the risks are 6 to 7, but here it is 9 to 10. This is very funny thing. Earlier they projected that the LIC may garner a good number of anchor investors, but only 3 turned up and others remained silent. Going by the market valuation of rupees 6 lakh crore, the issue size is estimated at 21,000 crore. There could be a green shoe option too. However, sources have not confirmed that at the market valuation is nearly 1.1 times of the embedded value. International actuarial firm Milliman Advisors has estimated embedded value about rupees 5.44 crore as of September 2021. So here what happened to green shoe option? So anybody interested can just search and understand what happened to the green shoe option, which was, these are the things which we should understand. Things take place, but we should understand. What happened to green shoe option? What happened? What happened? What happened to green shoe option? Green shoe option. What happened? I read again. Estimated at 21,000 crore. There could be a green shoe option too. Is it silent on that? Let us see in future course. So everybody say, because it is a trusted household name, LIC. No, Obi, it is also maybe there. So everything we speak positively on LIC, and now LIC never thought that it would have to shell out. It may turn out to be a company like this, but today it's a reality, and the government is sucking money from the people. The board of LIC has agreed to dilute a 3.5% stake with an upper band limit of 5% amid headwinds from volatile stock markets and investor interest. So from 5 it is reduced to 3.5. Getting the LIC IPO into motion sends a strong signal to the market that government means business. Government means business. So the government is doing business with LIC in its arm. So government is a merchant. Getting the LIC IPO into motion sends a strong signal to the market that the government means business. Disinvestment and asset sales are two big reforms that the government has been trying to push under hard conditions. More than setting the tone for future divestments, it will reflect the government determination on boost sentiment at a time the market is unsure on whether the government is holding back because of uncertain conditions. So green shoe option, please explore. We will be telling in another episode. At one time we read one message, the next day we receive a contradicting message. LIC sees huge interest from anchor investors ahead of IPO, and only 3 anchor investors have come. Here you can read from here. Let me tell you. Here they say LIC anchor book breakdown, only 3 have come up, and Norwegian Sovereign Wealth Fund and Singapore government and another GIC, and here it is shown LIC sees huge interest from anchor investor ahead of IPO. What happened to the huge interest that was seen before? What was happened to the huge interest? If we just go a little deep, let us understand how many were actually interested earlier to doing that. Since the government will be selling 3.5% stake in the LIC during the IPO, the insurers may be given an exemption from complying with SEBI's rule that requires publicly traded companies to achieve minimum public shareholding of 25% in 5 years. Every time we see that LIC is the biggest, strongest and greatest IPO, but the subscription from the investors anchor investors is not so happy. This is May 5th mint. Policyholders and retail investors make a dash for LIC's initial share sale on day 1. So they are making a dash but not a big dash. Policyholders and retail investors make a dash for LIC IPO on day 1 to compete. Domestic mutual funds subscribed 74% of the share offered in the anchor allocation, even as foreign institutional investors' participation was tepid, subscribing to just 17.7% of the anchor allocation. Domestic mutual fund and purchases were led by SBI Funds Management Limited, ICICI Prudential Asset Management and HDFC Asset Management Company Limited. Overseas investors included BNP Investments, Norway's Government Pension Fund and Global and Government of Singapore. While the government planned to sell 5% of the LIC initially, the issue size was reduced to 3.5 and valuation lowered to 6 trillion as markets turned volatile on account of the Russia-Ukraine war, global inflationary concerns and rising interest rates. This is the right size considering the current capital market environment and will not crowd out capital and monetary supply given the current environmental constraints, said Tuhin Kanta Pandey, Secretary Deepam. Valuation flows from optimizing positioning, devising the best marketing strategy, assessing investors in the right way and right sequence, structuring the deal appropriately and selecting the optimal market window. Here we read, policyholders and retail investors make a dash for LIC's initial sale. India's biggest initial public offering received a robust response, with retail investors placing bids for nearly 2/3 of the life insurance shares on offer on the first day of the share sale, despite a stocks sell-off. Strong demand for the shares came on a day the benchmark indices Sensex and Nifty fell 2.29 each after a surprise interest rate hike by Reserve Bank of India. So on the very first day when it was rolled out, the Reserve Bank of India hiked the rates, and it had effect on the markets, and they came down by 2.29 after a surprise interest hike. The portion of the share sale reserved for policy holders saw the strongest demand on the first day, with the segment getting subscribed 1.99 times. So 1.99 times is referred as the strongest demand, but usually it will be something 3 times, 4 times like that. While the portion reserved for the institutional investors and high net worth individuals was subscribed to 33% and 27% respectively, according to data from stock exchanges. Shares reserved for LIC employees were subscribed 1.17 times. The LIC share sale ends on May 9th. So this is the position, and you can understand things as they are. On May 5th. %, 33%, strong demand 2.29, $1.17 times. This is the story of the first day. A contrast and compare. They said the rural investors will flock to the LIC participation, and let us see how many of them have flocked. LIC will breach 2% VNB margin faster than others. That was told by Mr. Kumar, Chairman LIC of India. So he was very optimistic. Insurance behemoth LIC, whose mega 21,000 crore public offering will launch on May 4th, is confident of quickly catching up with the private players on the profitability front and expects its VNB, value of new business margins, to cross 20% in the coming years. This will be achieved at a pace faster than what the private peers clock, said its chairman Mr. M.R. Kumar. So, in order to show its performance and brightness, the VNB must be more, and that must be achieved soon. So, that was the expectation of Mr. M.R. Kumar. LIC IPO will provide impetus to rural participation in equity markets. So, what was the participation on the first day? The LIC IPO is expected to attract millions of new investors, given the trust that LIC has built with the common man over the decades. A lot of these investors, who might also be policyholders, are expected to come from Tier 2 and 3 towns. A majority of rural households have little or no financial literacy, and most prefer to park their money in the bank deposits and therefore settle for lowest interest, while investments in the capital markets offer massive opportunity to grow their wealth. So this is the massive opportunity offered to park your money in the capital markets. LIC has come for all the rural investors to park their money in the capital markets and gain more wealth. And how many of the rural investors are now have rushed to do this? It's a $1 billion question. How can we make it out? Okay, after the third day, I can see fresh items. LIC IPO, Norwegian Wealth Fund, GIC and SBI lead anchor investors. Only these three, as I was telling. India's mega IPO of Life Insurance Corporation of India got off to a good start with the $732 million of shares reserved for so-called anchor investors. Oversubscribed at upper end of the price range, a banking source said. The government had said that it expects to rise up to 2.74 billion, just a third of its original target, from selling 3.5% stake in LIC in the country's biggest initial offer. Anchor investors are high-profile institutional investors that are allotted shares before the subscription opens for retail other investors and have to commit to holding their shares for certain period. LIC's offering is set to open for other investors on May 4th and will be closed on May 9th. The indicative price range has been set at $902 to $949 per share, with $732 million of shares set aside for anchor investors. Norwegian Wealth Fund, Norges, Bank Investment Management, and Singapore Sovereign Wealth Fund GIC have subscribed to the anchor book, the source said. Alongside the other global funds, domestic mutual fund houses such as HDFC Mutual Fund, SBI, ICICI and Kotak have also come in as anchor investors, the source added. So the anchor investors are like this, you see. Yeah, here. Also have come in. Biggest mutual fund investors who have come in: SBI Equity Hybrid Fund, ICICI Prudential Value Discovery Fund, SBI Balanced Advantage Fund, HDFC Balanced Average Fund, SBI Blue Chip Fund. They have also amount invested here in crores, in small crores, and other crores from Government of Singapore 190 crore, BNP Paribas some 4 crores, Government of Pension Fund Global 225 crore, Government of Singapore and Monetary Authority 190 crore, General some other, all these people have done like this. Actually 18 people were expected. We wanted this to be oversubscribed many times. So for 3.5 this was concluded here. Anyway, it's good, this pushing off, and if not as expected 120 times, 80 times, 90 times, at least it will be raised to some extent satisfactorily. So 2 more days are there for the, maybe 2 more days or 1 more day, and we will see 2 days report tomorrow, and May 3rd. LIC's initial share sales is a strong demand from anchor investors. What was the strong demand? We did already. The anchor book is to be allocated up to maximum allowable of up to about 5,620 crore, and it is fully done, one of the two officials said. Investors including Norwegian Wealth Fund, Norges Bank Investment Management and Singapore Sovereign Wealth Fund GIC were allocated shares of LIC before the sale opens to public on May 4th. The anchor book is allocated up to maximum allowable up to about 5,620 crore, and it is fully done. And it is fully done. The anchor book is allowed up to maximum allowable of up to about 5,620 crore and is fully done. Retail investors, policyholders and employees will be able to invest rupees 2 lakh each, and the categories will be mutually exclusive. The categories are mutually exclusive, and hence policyholders, retail investors, policyholder and employee will be able to invest 2 lakh each, and the categories will be mutually exclusive, which makes them eligible for 6 lakh investment. LIC share sale sees strong demand. LIC's IPO will be the first to offer 3.5 stake to the public lower than 5% minimum as stipulated by SEBI. The institutional investors who failed to get shares during the anchor allotment process can buy LIC shares from the qualified institutional buyers quota, which will offer shares worth at least 10,500 crore from QIB. The remaining shares will be allocated in the ratio of 50% to qualified institutional buyers, 35% to retail investors and 15% to non-institutional investors. Geopolitical tensions, soaring oil prices and monetary tightenings by major central banks have made global investors skittish. About emerging market stocks, crimping demand for LIC shares, waning investor demand after Russia's invasion of Ukraine has also squeezed the valuations. So this is the status. On day 1, we will look to it again after day 2 and 3, and before conclusion we will see some portion of here. So they said a lot of demat accounts would be opened and many facilities were done. So LIC is keeping its natural clout and drawing the investors and everyone to its fold to show off its strength. So the LIC IPO is now set in motion. Let us all hope for a bright future of the investors and retailers and policy holders and all people to understand the risks. And finally, let us read the disclaimers of SEBI, disclaimer of BSE, disclaimer of NSE, disclaimer clause of IRDIA, general risks. So this portion also must be read carefully. Everybody comes out with a disclaimer that he does not know anything. If anything goes wrong, it is your lookout. Don't feel that somebody will come and address your demands or your questions. The disclaimers are ready. Disclaimers are many. Disclaimer clause of SEBI. I read first and the last. Disclaimer claim of the SEBI. SEBI only gives its observations on the offer documents, and this does not constitute approval of either the offer of the specified securities stated in the certified that RHP has not been cleared. The investors are advised to refer to page 534 of RHP for the full text of the disclaimer clause of SEBI. See the disclaimer clauses. IRDA, the Insurance Regulatory and Development Authority of India, does not undertake any responsibility for the financial soundness of the corporation or for the correctness of any of the statements made or opinions expressed in this connection. Any issuance of observation by IRDAI under the LIC general regulations shall not in any manner be deemed to be or serve as validation of the representations by the corporation in the offer documents. So IRDA is staying aloof. He does not know anything. He does not give you any guarantee. You are taking risk. Nobody is on your side. It's a government company. President of India, the money goes to Government of India, and IRDA does not know anything about that. Money goes out of your pocket, then you can't find it. General risk. Investments in the equity and equity related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Investors are advised to read the risk factors carefully before taking an investment decision in the offer. For taking an investment decision, investors must rely on their own examination of the corporation and the offer, including the risks involved. The equity shares in the offer have not been recommended or approved by the SEBI, nor does the SEBI guarantee the accuracy or adequacy of the contents of the RHP. Specific attention of the investors is invited to risk factors beginning on the page 24 of RHP, and the risk factors are shown here. So before investing, investors are to be guided. Investor protection funds are there. Everything come at a later stage. Here are the risks. Here are the disclaimers. No one is going to be on your side. The government is doing business. Government is a merchant. You are purchasing a product from him, and they will be listed on the bourses. Again, government interference. If everything goes well, it is good for you, me, and the government of India and India as a whole. So friends, with this I conclude the first review on LIC rollout after day 1. Let us meet again on day 3 to discuss its progress. With this is Dilse with Ratnam signing off. Have a great day. Bye. Warning bells.